This is the key difference between how a mutual fund operates and an ETF operates with regard to contact with the general public. ETFs have a third party in between us and the general market that handles all transactions of the ETF. So if an individual wants to buy shares of an ETF, they have to buy them from a market maker, and if they want to sell shares of their ETFs, they sell them to that market maker. Now that market maker is authorized to create and redeem shares with us as the ETF company. So in the example of a client who wants to buy shares of an ETF, the way that works is they have to accumulate enough shares to be able to make up what we call one unit, typically 50,000 shares. And let's say in this particular case, there's been enough buying demand for that market maker to want to create one new unit or 50,000 shares of that ETF. Well, what we do is we tell that market maker what's in the ETF. Let's just say it's one yellow, one red, one blue, and one green stock. The market maker goes out and buys those stocks for the creation unit. They deliver them to us at the ETF company. We put them in the portfolio, and in return for that, we deliver out new shares of the ETF. Same thing's true in reverse. Let's say that there's a lot of orders for people who want to sell their ETFs. Well, the market maker will accumulate those orders in the size that they have to in order to redeem 50,000 shares. They'll notify us at the ETF company that they need a redemption. What we'll do at the ETF company is we'll go into the portfolio and we'll identify that a unit is actually one yellow, one blue, one green, and one red. We'll put those into a basket and deliver them out to the market maker, and the market maker sells those stocks in the general market, thereby not having the fund itself actually take any action with regard to buying and selling. One last little point that's important is when we have redemptions, what we're able to do is look in our portfolio and find the yellow, green, red, and blue stocks that have the lowest cost basis, and we'll put that in the redemption basket and send it to the market maker. That raises the overall cost basis on the remaining portfolio.